FM, and that's Vanessa Carlton is there. Good morning. Hi, glad you're here today. What's in your pocket? I hope it's more than 50 cents or so, because we're here to talk about money. And I'll bet you got more than that in your IRA and 401k. If you're worried about it and you're keeping tabs on it, that's what we do this time each day. Let's check in with Phillip Statler from Statler Financial Services and get his take on what's going on Wall Street today. Phillip, good morning. How are you?
Hey, good morning, Dave. Doing well today. It's, man, the week's coming to an end faster and faster.
I was going through a little case of earlier this morning when I looked at the calendar and said I'm only 2.5 weeks away from Christmas. Have you started your Christmas shopping yet?
Yeah, I've started a little bit. I still got more to do.
You've always struck me as the more methodical sort of guy. I haven't even thought about it yet. Of course, with my bad handwriting, I gave up on the postal service. Handwritten cards for me ain't going to work, so everything goes out e-cards from me. It is not laziness on that part. It's sent out thank you notes after Gladys's funeral, and half of them came back. They couldn't read the address, so that kind of was my hint that I'd probably better just give up on handwriting for the rest of my life. So I do have one luxury. I can do things at the last minute. It's kind of on purpose.
There you go.
We are talking money today, setting the table. Yesterday was kind of a blah day. Nothing really exciting on either side. The Dow managed to eke out a rock-crushing $1.50 gain. S&P was off by $7.30, and the NASDAQ down 56. That is 0.5%, but compared to what we're used to on NASDAQ, that looks like a flat day, doesn't it?
Yeah, it really does, compared to some of the ups and downs we've seen. And so it's not a huge deal, but it's still 0.5%, which is nothing to sneeze at.
Absolutely. You and I were kicking something around, a second survey that relates to the only real government data dump that comes out this morning. First-time jobless claims, according to the Bureau of Labor Statistics this morning, nuts on target. 230,000 first-time claims in the last week. That's exactly what the economists expected. But I think we're going to have to start looking at that U6, total unemployment and underemployment rate, because you found another number for unemployment that kind of makes a difference, doesn't it?
Well, it does. So, the numbers that we always get and we always share and talk about are what they call the BLS numbers, and that's the Bureau of Labor Statistics numbers, because it gives that snapshot of the non-farm payrolls. Well, there is another survey that does go out on a regular basis. It's called the Household Survey. And so the BLS, it surveys businesses. How many people did you hire? How many job openings do you have? That type of thing. Well, the household survey surveys households. Did you get a new job this year or this time? Or better yet, are you unemployed? Right. So they only count everybody once. So I could be working full time and inflation's kicking up, and now I need to supplement my work. So I get a part-time job at Walmart or Publix in the evening. Well, now I've added to the BLS survey. Right now, I am another job. I'm another employment statistics, where for a household, nothing changed other than I had to go get a second job. And so my unemployment or my employment status didn't change really. I'm still employed. I'm just employed twice now. And so what this article I read is that basically the divergence between those two surveys has become astounding. I mean, like 2.7 million worker difference. And so that's quite a big deal. And so, maybe if the Fed's looking at the right things, then that jobs number that we talked about the other day may have not been that concerning, because it's actually the reverse. People are having to get a second job or a third job to help with inflation right now.
And when you look at the notion, okay, fine, it was concerning for the market. It was encouraging for the economy as a whole. Maybe it shouldn't be as encouraging for the jobs creation number that we're seeing coming out of the federal government every month rather. And we may be not in as good a shape as we thought we were economically, and we don't need to worry quite as much about the Federal Reserve as they may be and we should be. Both sides of the fence are kind of different.
That's right. As long as the Fed's looking at the right numbers, right? Because one of the quotes in this article was that the double counting in November was actually 454,000 jobs, and so substantially more than the number of increased jobs that were expected. So I think that that's something that maybe we need to kind of keep a look at. I mean, they're using the words, this guy in this article, unprecedented, that we're seeing that much of a divergence.
Really, that is a difference. My suspicion is we'll see some of that in the underemployment number that comes into what I always refer to as the U6. That's the total unemployment. And remember, the government doesn't quote that proverbial number that we put out, 3.6, 3.7%. That's a completely different number than the total number of under and unemployed people that come out each month. And frankly, I've been remiss. I haven't been watching it that carefully because it pretty much was tracking close, but it may very well tell a more interesting tale next month when it comes out.
Well, the other thing I think we have to look at, hold on, I want to add just a little bit there, because your U6 still isn't going to show you the person that's working a full-time job and is taking a part-time job.
That's true. Yeah,
it's going to tell you the person that's only working part-time, but it's not going to show you those families now that have a full-time, two full-time employees working, husband and wife, and now one of them's had to go get a part-time job because of inflation.
So why in the heck can't I find a bartender these days?
I guess that's not where they want to work.
Evidently. Other tidbits floating around this morning. Needs to be mentioned, by the way, because it was pretty much top of the news while it was happening. Brittany Griner, the WNBA star, just got released from a Russian prison camp. Doesn't change money any, but it's a headline news element, so we got to mention that big high-profile prisoner exchange with Russia. Other items that are out there today, and I saw this and kind of giggled at it. I'll bet you didn't notice the New York Times is on strike today.
Didn't change my news feed any.
Didn't change mine either. New York Times is doing a 24-hour strike. All their journalists are on strike at the Times. It's amazing. Nobody noticed. Newspaper went down for the day. Oh, well. Other downgrades and upgrades and whatnot, the press is still all a Twitter over Carvana. They're still saying it could very well be bankrupt before long. Now they're adding on another item of business that I know you've been tracking quite a bit. They're saying Salesforce is cruising for a bruising as well because their numbers have been off, and they're saying that Salesforce could very well be our next victim of the economy.
Well, they could be. I mean, I've read a couple things, and they're having some changes in the C-suite. The co-CEO has resigned and is leaving. And so there's some turmoil at the top, which is never a good sign. And so we continue to watch. I mean, they are the Cadillac when it comes to, client management systems. But so yeah, I'm sure there's some people that are having a hard time as businesses slow down. That bill's still there every month, and it's no small cost. I mean, they are a Cadillac when it comes to CRM services.
And plus the fact that it's so darn hard to find salespeople. We just finally found a salesperson that we were looking for 6 months ago and been searching for a year. And I can't tell you how many of my advertisers are saying, I got to find a salesperson. It's if you can't hire them, you can't manage them, right?
That's right. Exactly.
That's bottom as well. Other things going on, the SEC, the Securities and Exchange Commission, their chair suggests that there may have been violations of securities laws in that Bitcoin exchange, that FTX Bitcoin exchange that went down. He didn't mention their name, but the SEC has now officially raised one eyebrow on the Bitcoin market. And I got to believe all those coin-op vending machines where you can buy Bitcoin on the Walmarts and whatnot and all the other Bitcoin exchanges are suddenly looking to really how fast can we clean up our act now that the feds are watching us.
Yeah, well, exactly. And that's an industry that's still been running loose. And so, not much regulation there. And that's what happens when you have a non-regulated money industry like that. It starts to get a little sideways.
Yeah, it looks like this one might be. Reports that are out that are happening, one of our favorite stocks, GameStop, reported, huh?
Yeah, one of those meme stocks. It had a wider than expected quarterly loss. Imagine that, right? Sales fell shorter than was predicted. They have done something that they have completed. They say they're necessary investments into the company. And so now they're going to be very judicious in their future spending. And so they were getting beat up pretty big this morning early. They've kind of flopped back and forth, and they've gone to a gain now. They're up about 1.2% right now.
Must fallen out of love with them with the Reddit gang, huh?
Yeah, I think so. I think they finally are out of that stream now.
they got to actually produce some shareholder value instead
That's
of becoming politically correct. That's it. What else we got out this morning?
There's a company called Sienna. Sienna is a computer networking company. They got 4 or 5 different things that they do. And they had a substantial increase in their top and bottom lines this last quarter. And they earned 61 cents a share compared to 8 cents that was estimated. And they see, I like this quote here, they see outsized revenue growth in 2023. I assume that means that it's going to be a good thing because they're up 18% this morning.
Whoa, it's nice to have a success story in the mix. What else we got?
It is. We got Rent the Runway. Who'd have thought that they had a decent quarter, but their revenue came in well above expectations. I'm sure they still lost money, but they didn't really say in this report. They've gone through all their restructuring process is pretty much done now. And so they're getting a nice bump today, up 14% this morning.
Well, is that now, clothing or aircraft?
No, it's clothing that you rent the clothing.
Okay.
Yeah. Now
I was wondering if it was a private jet service or something.
No. I will say it's not an expensive stock. It closed yesterday at $1.36 a share.
Ooh, I'm impressed.
Hey, the other one I have for you.
I thought it might be private jet service or something. I don't know.
I've got another one for you. Forgot Express. The clothing retailer, small company, and they have had a big announcement that they made. They've announced a strategic partnership with this global brand management company called WHP. They're actually going to even take a $25 million stake in Express. So that was some good news that offset some of the bad news that came out, because the bad news is that it had a wider than expected loss and lower than expected revenue for this last quarter. But because we got that investment coming in from that outside firm, again, this is a low stock. I mean, it closed yesterday at $1.28 a share. Right now, it's up 66%.
Wow.
Yeah.
It's only a few pennies, but the percentages really add up if you get a ton of stock in them.
Exactly. Yep. So, some benefit from that outside firm making an investment into Express, and shareholders feeling that that's going to add a lot of value.
I got you. Well, to reset the table, it was kind of a nothing day yesterday. As I scrolled down my tip sheet, I think we got some good news this morning, 45 minutes early. How are we doing?
Well, at least let's say it's not bad news, right? So the markets now are bouncing back off of 2 days of maybe even 3 days of misery. We got the Dow up a little over 1/3%, $125. S&P 500 is up a half, $20, and the NASDAQ 100 up a little over a half at $60. So things looking good there. On the commodity side, we've got another big jump in silver, up another 1.25%. Back up over $23 an ounce to $23.19 an ounce. Gold has slipped back down below 1,800. It's at 1,799, down up just a tad from yesterday's close. Crude oil is up substantially from the close yesterday, up 4% at $74.90 a barrel.
And it's still under 75, though, as far as the morning quote, so we'll take that nicely. Asian Rim, you can tell the politics in China are having an effect. Hong Kong was up by over 3% yesterday. The rest of the exchanges pretty much just flat. Europe is up fractionally halfway through their day. If your IRA is wobbling back and forth with these market ups and downs, that means you got too much risk in it. If you're getting close to retirement age, that ain't good. How do I find you to be able to get the risk out and control how much I've got in my portfolio, Phillip?
Dave, that's exactly the reason that we developed the Core Retirement Design. Give us a call at 863-382-0037 to schedule your core retirement analysis. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730 and 95.3 FM.
And back here together one more time for the final day of the week tomorrow here on Light. Phillip, thank you so much, and I'll see you then, all right?
All right, man. Have a great day.
Be well. It's 105.7 Light FM and Statler Financial Services. Phillip Statler.
Hey, folks, again, I want to thank you for joining us today. Hope your week's going well. Join us again tomorrow, same time, same place. Until then, have a great day.